Hey friends, welcome back to the channel. I'm Iggy, and I've been covering stocks, finance, CPF, and all things wealth building here in Singapore. The Investing Iguana is now ranked 8th in the 2024 Influential Tigers by Tiger Brokers. Thank you for helping us cross 1 million reads and hitting 58,000 likes. With over 1,000 videos created and more than 600,000 watch hours, as of August 2025, the Investing Iguana is your home for smart investing in Singapore and beyond. Today, we're dissecting the action on the Straits Times Index, looking at the biggest movers and shakers for September 6, 2025. If you want to grow your wealth and make smarter, quicker investment decisions in Singapore, you'll want to hear this. Let's get into today's STI Movers and Shakers, where I'll break down the top 5 gainers and top 5 losers. I'll share my view on what's driving these moves and why they matter for you as a Singaporean investor. You'll walk away with actionable insights, not just a list of winners and losers. Ready? Let's jump right in. First up, the stocks that sprinted ahead. Today's top gainer is UOB Kae Hian. With a 12% jump, UOB Kae Hian is making headlines. The catalyst? Strong alpha pick strategy results that have outperformed the STI in July, delivering a remarkable 17.7% month-on-month gain. This brings a flood of investor interest, as the company's savvy portfolio outperformed the index and highlighted their knack for picking winning stocks. The upcoming MAS capital deployment also has investors betting on higher market activity and brokerage earnings. What does this mean for you? UOB Kae Hian's surge tells us that market confidence is high in brokers who deliver consistent results, especially as Singapore's equity space heats up with increased volatility and opportunity. If you're holding brokerage stocks or considering sector exposure, this could mark a longer trend. But hey, things can move fast. Did you already miss the boat? Or is this just the beginning of a re-rating for local brokers? Riverstone surged 8% after a rough patch. So what's behind the bounce? Recently, analysts have noted optimism for the second half of 2025, driven by strong demand in the higher margin cleanroom glove segment. The company's technical analysts have flagged a likely bullish reversal. Cleanroom glove demand, which is less exposed to price wars than medical gloves, is lifting investor sentiment. Singaporeans should note Riverstone's move might look like a rebound, but keep an eye on earnings trends. There's an undercurrent of risk in the glove sector, yet Riverstone's market niche, critical for high-tech manufacturing, could lead to outperformance if demand holds up. Prudent CPF and SRS investors might want to watch for stable cash flows before diving in. Third in line, Yangzijiang Shipbuilding cruised up 7%. This is no fluke. Yangzijiang just delivered a record H1 profit with a 36.7% year-on-year jump and strong margins. Despite global shipping volatility, their aggressive push into green vessels and terminal expansion is paying off. The shipping sector has seen a global boom, and YZJ's operational efficiency is a highlight in the sector. Should you come aboard? This momentum shows faith in Singapore's shipping and offshore sector. Exposure to China's trade and smart fleet renewal could reward patient investors, but be wary, shipping is cyclical. Is this uptrend sustainable or another fleeting tide? Genting Singapore staged a comeback, up 6%. Investors are likely repositioning ahead of its major RWS 2.0 redevelopment and the recent successful launch of new attractions. While profits dipped due to higher costs, long-term optimism remains thanks to continued visitor growth and new precincts coming online. For CPF/SRS investors, Genting's reliable dividends and growth in tourism flows make it attractive for portfolios needing steady yields. But remember, cyclical swings in gaming and hospitality can bite. Is Genting prime for a long bull run or just catching its breath? BRC Asia rounds out the list with a 5% gain, powered by a record's $2 billion order book. New mega contract wins, especially Changi Airport T5, have solidified its dominant role in Singapore's steel and construction supply chain. With the construction boom and major infrastructure projects in play, BRC's fundamentals look as solid as its steel mesh. What's next? Expect robust earnings visibility. BRC is seen as a buy by multiple analysts, and the dividend yield is juicy for income seekers. But keep your eyes peeled for any slowdowns in building activity. Now let's talk about the stocks that tripped up. First, on the losing end, NIO, which is listed on the STI as a key China electric vehicle player, fell 6.26%. After a stunning 42% surge in July, some profit-taking was inevitable. Latest delivery numbers for July softened, falling to 21,017 vehicles after a record-setting June. Softer demand and global competition, especially from other EV makers with new models, sparked this pullback. Is this a value trap or simply a timely breather? Investors betting on a China EV comeback should watch delivery momentum and margin pressure. NIO's volatility is a double-edged sword. Opportunity or whiplash? Next up, Hong Asia, down 5.1%. This comes after a long rally from strong H1 results, including a 13% jump in profits. But the recent sell-off looks like investors getting cautious after a sharp run-up, possibly some cashing in on gains, plus concern about whether growth can keep pace with expectations. For the Singapore investor, Hong Leong's fundamentals are still resilient, but near-term volatility could persist if earnings momentum slows or if sector sentiment wobbles. Time to reload or time to cool off? PropNex, the property broker, took a 5.1% dip. This comes despite solid price momentum in past weeks and a recent 26% jump. The reason? Investor fear over high PE valuations and concerns that Singapore's property market could face cooling measures or slower earnings growth ahead, even as transaction volume stayed healthy in July. Singaporeans love property, but is this a warning sign? Keep an eye on policy risk and the sustainability of earnings. PropNex remains strong, but sentiment could remain jittery. Hutchison Port slipped 3.75%. There's concern over tariff and throughput softness, especially with U.S.-China trade tensions and a weaker outlook for global shipping. Analysts have trimmed forecasts for 2025 amid volume declines and policy uncertainty, though the company's dividend yield remains attractive for yield hunters. Is this a buy for the patient or a falling knife? Sometimes if the yield looks too good, it comes with extra risk. Make sure the fundamentals can cover the juicy payouts. Closing the loser list is Bumitama Agri, down 3.36%. Recent numbers remain strong with the Fortune Southeast Asia, 500 recognition, and a sizable jump in first-half profits. But palm oil prices remain under pressure from global macro fears, and there's ongoing concern about new supply and regulatory changes in Indonesia and Malaysia. For Singaporean investors, this is a case of strong fundamentals facing tough sector headwinds. If you believe in the palm oil cycle, these dips could be opportunities, but you must watch for long-term price and regulatory support. If you're hungry for more detail, you'll want to check out our premium Investing Iguana Substack. There, you'll find in-depth written analysis on today's STI Movers, deeper dives into company financials, entry and exit strategies, exclusive charts, and much more. The link is right there in the description. Go take a look and supercharge your market insights with the full written breakdown today. So what's my big picture take after digging through today's shakers? The STI is still trading with cautious optimism. Strong showings by UOB Kae Hian and BRC Asia reveal that Singapore's financial and construction engines are revving up. Opportunity is alive, especially if MAS unveils more supportive policies. But rapid moves, both up and down, remind us to avoid chasing hype. Focus on substance, not just recent headlines. For CPF and SRS investors, be selective. Dividend yield in sectors with long-term government backing. Think infrastructure, steel, select REITs. Offer good ballast. At the same time, watch the ripple effects from China, both positive, like shipping, and negative, like volatility in EVs. As always, don't let FOMO dictate your next move. Study each company's longer-term story and how it fits Singapore's economic engine. My advice? Stay nimble, focus on value and durability, and use short-term market moves to rebalance towards your goals. Remember, every pullback is a chance for the patient and prepared. There you have it, today's full breakdown of the STI Movers and Shakers. Whether you cheer for the winners or watch for bargains among the losers, staying informed keeps your wealth journey moving forward. What do you think? Is the market sending a fresh signal or just blowing off steam? Drop a comment with your views and let's chat. So, we've broken down today's September 6th, 2025 STI Movers and Shakers, and I've given you my personal take on what it means for your investments here in Singapore. If you found this video helpful and want to seriously level up your investing game, please give it a like, share it with your friends, and subscribe to the Investing Iguana channel so you don't miss our next insights. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox, giving you a significant head start. It's just $1 a month, less than a cup of coffee. Think of it as your consistent daily dose of financial fuel for smarter decisions, delivered before the masses. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today.